Temu's recent challenges, the U.S. tariff effect. The Chinese e-commerce platform, Temu, is grappling with significant challenges in the U.S. market, primarily due to recent tariff policies. The Trump administration's decision on May 2, 2025, to terminate the de minimis exemption for packages from China has hit Temu hard. This exemption previously allowed items under $800 to enter the U.S. tariff-free. The introduction of new 145% tariffs on Chinese imports has compounded the situation, making it increasingly difficult for Temu to maintain its competitive edge. In addition to the tariff changes, Temu's operational model, which heavily relies on direct shipments from China, has been severely impacted. Previously, Temu managed approximately 75% of its business from China, leveraging low-cost manufacturing to offer attractive prices to U.S. consumers. However, the increased tariffs have led to higher prices for customers, diminishing the platform's unique selling proposition of affordable pricing. The immediate consequence of these tariff changes has been a notable decline in Temu's U.S. user base. As of May 2025, Temu saw a 58% drop in daily active users, a figure that underscores the severity of the impact. This decline is not merely a temporary setback, but a reflection of the broader challenges that Chinese e-commerce platforms face in navigating an increasingly protectionist global trade environment. The drop in daily active users for Temu has been stark. Data from Sensor Tower reveals that Temu's DAUs in the U.S. plummeted from over 60 million in early March 2025 to approximately 40 million by May 1, 2025. This drastic reduction indicates a significant loss of consumer interest and highlights the adverse effects of the tariff changes on user engagement. The decline in DAUs is a critical metric, as it directly correlates to the platform's ability to generate revenue. Moreover, Temu's daily gross merchandise value, or GMV, in the U.S. market has also suffered. Between early March 2025 and May 1, 2025, Temu's GMV decreased from $80 million to $40 million. This 50% drop in GMV is indicative of the challenges that Temu faces in sustaining its business model under the current tariff regime. The decline in GMV reflects not just reduced sales volumes, but also a contraction in the range of products that Temu can competitively offer to U.S. consumers. The impact on GMV is further exacerbated by logistical challenges. Customers have reported instances where import charges on goods shipped from China exceeded the item's cost, adding another layer of complexity to Temu's operations. Such issues have led to dissatisfaction among consumers and have further contributed to the decline in user engagement. Temu's struggle to maintain its market position in the U.S. is emblematic of the difficulties faced by Chinese e-commerce platforms in adapting to rapidly changing trade policies. The decline in both user engagement and GMV underscores the need for strategic pivots to navigate these turbulent waters. PDD Holdings, the parent company of Temu, has felt the financial repercussions of the U.S. tariff policies. In the first quarter of 2025, PDD Holdings reported a 38% year-over-year decline in profits, a clear indication of the pressure exerted by the tariffs on their business model. Lei Chen, PDD's chairman and co-CEO, acknowledged that the tariffs have created significant hurdles for their merchants, affecting the company's overall financial health. Faced with declining profits and user engagement, Temu has been forced to reassess its strategy. One of the most notable shifts has been towards local fulfillment. This strategic pivot involves sourcing over one-third of U.S. products from American warehouses, a significant change from the previous model where the majority of business was managed entirely from China. By localizing fulfillment, Temu aims to mitigate the impact of tariffs and offer more competitive pricing. However, this transition is not without its challenges. The shift to local fulfillment requires substantial investment in logistics and infrastructure, areas where Temu has limited experience. Additionally, the company has cut its advertising spending by 80%, to allocate resources more effectively towards this strategic shift. While this move may stabilize the business in the long run, the immediate impact has been a reduction in market visibility and consumer awareness. Despite these efforts, Temu's transition to local fulfillment has encountered hurdles. Customers have reported issues with product availability, and the rapid change in strategy has led to operational inefficiencies. Nevertheless, Temu's pivot reflects a broader trend among Chinese e-commerce platforms to adapt to changing market dynamics and maintain competitiveness in foreign markets. The challenges faced by Temu are not unique but indicative of broader market disruptions affecting Chinese e-commerce platforms. The imposition of tariffs has forced these companies to reevaluate their operational models and seek alternative strategies to sustain growth in foreign markets. Temu's experience highlights the fragility of business models that rely heavily on low-cost manufacturing and favorable trade policies. In contrast, Temu's rival Shein has managed to weather the storm more effectively. Although Shein has also raised prices, it appears to have maintained customer spending levels better than Temu. This resilience can be attributed to Shein's diversified supply chain and strategic investments in market research and consumer engagement, enabling it to adapt more swiftly to external pressures. The broader implications for Chinese e-commerce platforms are significant. As trade tensions persist, these companies must continue to innovate and adapt to new market realities. The shift towards local fulfillment, as seen with Temu, could become a more prevalent strategy as companies seek to circumvent tariff-related challenges. However, the transition is complex and requires careful execution to avoid further disruptions. Ultimately, the challenges faced by Temu and similar platforms underscore the need for agility and resilience in the e-commerce sector. As global trade policies continue to evolve, Chinese e-commerce companies must remain vigilant and proactive in their strategies to navigate an increasingly uncertain landscape. The experiences of Temu and others serve as a cautionary tale and a catalyst for change in the industry. Please subscribe to this channel for more updates.